welcome. You're watching Business Today. I'm Neetu Chandra Sharma, and this is our earnings special. Syngene's December quarter pointed out pressure from a large biologics program, even as the company extended its long term partnership with Bristol Myers Squibb and continued to invest in new capabilities. With global pharma and biotech companies recalibrating outsourcing cost structures, Syngene International is adjusting its operating and investment plans. To discuss what lies ahead, I have with me on the show Peter Bains, Managing Director and CEO of Syngene International. Peter, a very warm welcome to you. It is always a pleasure to have you on the program. I would like to start by asking you, recent quarter showed how a single large biologics program can influence performance. So is Syngene taking concrete steps to reduce dependence on individual large clients over the next 2 years, or how is it like?
Thank you, and thank you for having me on your program. Um, so let me break down your question a little bit. Clearly we are seeing the impact of a single large commercial biologics in our performance and playing through the financials. What is equally important is to look at the rest of the business if we put that impact to one side. And what we're seeing there, I think, is the strength of the breadth of Syngene's diversified platform, because we are seeing growth in the remainder of our manufacturing business, and that's both in small molecules and large molecules, where we're seeing improvements in capacity utilization playing into growth. And in our research services, right across the platforms there in chemistry, in biology, and in translational and clinical research, we're seeing growth across there. I mean, clearly the scale of the impact of this single product is playing through. But in terms of strategy, Syngene's strategy will remain very much focused on continuing to look to build large and long-term relationships. But that is very clearly the line of sight that we have as we build on our collaborations and hope to go from strength to strength there. So we will be looking to build diversity across our platforms and diversity across our collaborations, but that will include looking to build more large collaborations.
Okay, so having said that, you have extended this BMS partnership to 2035. Does the new agreement involve additional capacity commitments or a broader scope of work compared to the earlier contract?
And clearly we're thrilled to announce the extension with Bristol Myers. And with that extension, we now have a 10-year horizon out to 2035. And it's, I think, the best example of a long-term strategic collaboration. We're entering, a 27th year in this collaboration, and it's grown over that time to today, where we have, around 700 Syngene scientists supporting Bristol Myers in that dedicated center. The 10-year strategic horizon now gives both partners the opportunity to look at how this, very important relationship will evolve and develop in many dimensions. So it's been a relationship that has always grown and expanded, and this extension to the agreement, provides the foundation for that to continue. And we look forward, to continuing to support Bristol in strengthening their pipeline of innovative new drug candidates.
I would like to understand from you about this effective biologics program. So when should the impact from this program begin to ease, and should FY27 see a more normalization from that particular client?
So, I mean, it's an ongoing situation, and we expect, that it will continue to play out, in the coming quarters, and we will obviously we'll be following that and looking to see, where that goes. But it will play out in the coming quarters.
Okay, so let's talk about the newer contracts. Are the new contracts being signed at lower prices than the earlier cycles, or pressure showing up more in how contracts are structured rather than the headline pricing?
Yeah, I mean, pricing is always going to be a component of contracts, but we in Syngene, where we will need to be competitive there, but we're also looking in the wider sense, to add value in other dimensions of the contract that we offer in terms of delivering differentiated and high value services. So, our customer proposition is to add value to them, and that value can come in areas where we can add innovation into the mix, where we can look at speeding timelines, where we can look at supporting them in managing risk. And those are where we're focusing on enhancing our service proposition, but of course price will play a part in that.
No, the company has continued to invest through a softer cycle. So what are the three capabilities that Syngene is prioritizing most aggressively over the next 2 years or maybe the coming 5 years?
Sure. So, I mean, clearly Syngene has a history and a strategy to invest in emerging new capabilities and modalities, and that will very much be a part of our strategy going forward as we look at some very exciting opportunities. So we have invested behind, for example, peptides, and we have invested behind antibody drug conjugates. I think, going forward, we will look to continue, those investments. These are very exciting market opportunities where we see long-term business opportunity, and we can build on strengths that we have in our large molecules and our small molecules capabilities to enhance our capability offerings there. So these will be two. We see other areas that we can invest in behind emerging capabilities like PROTACs and the wider conjugation space and oligonucleotides. These are very exciting, high growth opportunities where we have footholds, and we'll be looking to develop some strongholds there. So the horizon for new modalities and opportunities is very exciting, and Syngene's very well placed, I think, to capitalize on many of them.
So about these new facilities that you have commissioned and expanded into advanced chemistry capabilities as well. So when should these assets begin to materially contribute to revenue and margins, Peter?
So, I mean, I think if I take chemistry, I mean, we are seeing growth there now, and we're looking to enhance that growth, both by, enhancing capabilities and building capacities as, these businesses build out. I mean, clearly our focus is on driving growth across all the cylinders in our engine block, so to speak. That is in small molecules, where we're looking to build on the increases in capacity utilization, strengthen the pipeline there. In large molecules, put aside the single product, we're showing growth there. We need to build on that. For example, in Bangalore, we've recently got the regulatory requirements to extend from drug substance into drug product with a sterile fill finish line coming on stream there to enhance our integrated service, and then into our research services in chemistry, biology, and translational and clinical sciences. We're investing behind technologies and capabilities there, including the applications of AI to enhance, our service proposition and to differentiate our service proposition. This is the focus that we're, concentrated on to drive growth across Syngene's wide and diversified platform capabilities.
So we have seen that the capital expenditure has continued despite margin pressures. So should we expect an elevated spending over the next 2 to 3 years, or will the investments now track utilization more closely?
I think what you'll see is capital and Capex expenditure in capabilities, technologies, including AI and capacities will continue, as will capital discipline in terms of allocation. We'll be looking at the areas, particularly where we can build from strength, to enhance our proposition, and capital allocation will definitely be a central part of our strategy to enhance growth, as will capital discipline to ensure that we, invest in areas where, the business opportunity lies and the opportunity to enhance our customer service lies.
Okay, if I were to talk about the outlook of the company over the next 12 to 18 months, So, which will contribute more to the company's growth? Maybe new client additions, expansion of existing programs, or scale up of recently commissioned facilities? How would you rate it?
So I mean, broadly, we'll be looking for growth in all the platforms. I mean, clearly, we have capacity that we want to fill in our manufacturing facilities, both here in India and with our recent acquisition in the United States. That is going to be a primary focus, to get those pipelines built and to start, increasing the capacity utilization to drive growth there. That is clearly going to be a priority in the coming 12 to 18 months, as you've described. But also, we believe we have exciting opportunities behind chemistry, where we've been investing in these exciting capabilities in biology, where we're now looking not only at discovery biology, but also biotherapeutics development and building, a really differentiated capability for biotherapeutics in India, and in translational and clinical sciences, where we think that the opportunity for India is growing with its very, very large accessible patient population, and Syngene's strengths both in clinical trial development, but also in translational sciences, which we see as a catalyst for differentiation there. So we'll be looking for growth across, all of the diversified platform capabilities that we have.
Okay, when we talk about the margins, it is not about only about your company. Across the pharmaceutical sector, what we are seeing is that margins have come under pressure across the sector. So once utilization improves, do you see any scope of recovery, or is it the industry settling into a structurally lower margin band?
So I think, margins move up and down a little bit in terms of cycles with new technologies coming on board, and differential value propositions there. So Syngene will remain very focused on margins, very focused on cost disciplines to ensure that, our margins, are controlled there. But we'll also be looking to extend and expand our service offerings and differentiated offerings that may enable us to look at, high value services, with higher margins. So there's always a balancing act there. And, we'll be focused on both sides of that in terms of driving enhanced value propositions, and in terms of ensuring that we're disciplined under cost controls to ensure we control margins through that lever.
Peter, thank you so much for your time. I appreciate it. And thank you so much for speaking to business today. I appreciate your insights on the company's outlook.
My pleasure. Thank you.